Well, hello everyone. It's Travis Cadman here with Arizona Investor, and I got to welcome you to our webinar presentation. And how exciting is this webinar presentation? Because we're talking about investing in U.S. real estate utilizing your registered plans. Now, whether that's your RSPs, your LIRAs, or your LRSPs, and we'll explain what these acronyms mean through the course of this presentation, but really what it means you can actually utilize your registered plans to invest through Arizona Investor to participate in some of the great opportunities that we think is just an opportunity of a generation or a lifetime where we can participate in the undervalued U.S. real estate market. And to help us with this presentation, we've got a featured guest. John Schultz is with us today. And John, how are you?
I'm great, Travis. How are you today?
Hey, I'm doing real well. Thanks, John, for joining us from Toronto. John's a chartered accountant based out of Toronto, and he's a tax and security specialist, and he's really the individual who represents the group that's really behind this entire program with us at Arizona Investor, and we're real privileged to have John on the line today. He's just a true expert when it comes to investing in utilizing your RSPs, and having that chartered accountant background obviously would help him facilitate that. Today's webinar presentation for everybody, we're going to be about 30 minutes, plus or minus a couple of minutes. And so, and if you have any questions through the course of this presentation, as always, feel free to type the question right in the question chat box on the right-hand side of your screen, and we'll be able to respond to you via email, and we'll answer all the questions that come in. But if you want to do that towards the tail end of the presentation, that'd be great, because I think that we would answer a lot of the questions that we have as we go through this through the presentation today. So in this webinar, what you're going to learn is we're going to learn about the two styles of deferred plan accounts. So we'll talk about those, and we'll talk about really what they mean. We'll talk about going self-directed with your RSPs, your LIRAs, and your LRSP. And I think most of you know what RSP stands for. It stands for your Registered Retirement Savings Plan. The LIRA stands for Locked In Retirement Account, and the LRSP stands for Locked In Retirement Savings Plan. So we'll talk a little bit about those and what they mean today, and then we'll talk about how to self-direct your preferred plan, which is really a deferred plan, and invest in Arizona real estate. And then we'll talk about how you can actually get started to start moving forward today. You know, on all of our webinars, we have a lot of repeat people coming on, whether it's be market updates or specific investment techniques or strategies or property management. But you know us as a turnkey real estate investment team that really provides you the full turnkey package when you're looking to invest in U.S. real estate. So anywhere from market research all the way through to registered plan division to property selection, our full-time renovation contractors. We provide a boutique service of cross-border tax specialists, which we do with our bona fide tax specialists on our team. We also interact with our Canada and U.S. mortgage lenders. You know, we have a full property management division. We provide the insurance through our third-party insurance provider. And then, of course, we provide some advice on foreign currency exchange that we do through our currency exchange providers. And then when you invest in your property, it's not over there. It's actually where our relationship just starts, because obviously you're going to want to be kept up to speed with what's happening with your investment, what's happening with the market, and maybe you want to buy your second or third property, which a lot of our investors do. So we're known as a full-service turnkey real estate investment team. And now today we're talking about RRSPs, and your RSP, your LIRA, and your LRSP is not an investment plan. And John, maybe you could just talk a little bit about that. And what do we mean by when we say that these investment vehicles are not an investment plan?
Well, generally, the returns on these plans have been less than stellar. A lot of individuals don't realize that the average rate of return over a 10-year period for the 10 years ended December 31st, 2011, in the North American stock markets, when you combine the averages, was less than 1%. Wow. Where real estate at the same time through 10 major North American cities had increased in excess of 97%. What these plans? Sorry?
That's a big difference, John.
Very big difference. And what these plans were designed to do, or why they exist, are to allow people to reinvest in traditional RSP-type investments, their gains or income, without paying tax up front and have that paid on the tail end. The only problem with this particular system is that today the average Canadian has less in their deferred plan than the sum of their contributions. And that's a pretty shocking statistic.
Well, that is a shocking statistic, and I think that's why so many people now, and we're getting so many requests from our investors saying, do you know how I can get access to my RSPs, because I'm tired of losing money year over year. And you hear about the stories about, they're looking at their statements, how they have less principal now than they had last year, but yet their investment advisor is still taking a fee, and they're wondering how they can actually participate in a real estate-based investment or another investment where they could actually start making some returns. John, there's two styles of accounts or deferred plan accounts. Maybe talk a little bit about the difference between an individual account where you would invest through, say, your bank or your stockbroker versus a self-directed account.
Well, that's generally what they are. The traditional style of account would be one where you open an RSP account with an investment house or possibly a bank, and you have a financial advisor investing on your behalf. This is the majority of accounts that exist in Canada today, and these are the reason people have not had very good returns. In fact, have had negative returns, and if when you were to take inflation into account, they would be extremely negative returns. So that would be your traditional account, the one that people are most accustomed to. Then you would have a self-directed account. What that means is you basically, in turn, bypass your financial advisor or a financial advisor, and you would then select the investments either by calling a broker to act on your behalf or on just registering online and purchasing stocks, bonds, certificates, things of that nature. And again, within these two types of accounts, you are very limited to the investments that you can make.
So that's great. So with going the self-directed route, you can actually take control of your registered plans, and you can actually direct them yourself, but only into specific approved investments. And that's a key word, I think, is there's really specific investments that you have to put your money into, because you can't just put your money into anything just because you went with the self-directed account. Correct, John?
That is correct. It has to be a qualified investment for a deferred plan. And Section 4900 of the Income Tax Act is very clear on what a qualified investment is.
Okay, so I think it's really clear for everybody that's on the webinar today to understand that just because you went self-directed with your plan doesn't mean you can invest in anything that you want. It's actually very, very specific on what you can and cannot invest into. So there's differences between how you may be investing right now and how you maybe want to take control of your finances, take control of your RSPs, but also remember that there is only certain specific investments that you can participate in. Now, when we talk about that, when we talk about being self-directed, we talk about some of the things that your self-directed RSP account can hold. And John, maybe you can just talk about some of these items.
Sure. Traditionally, in RSPs, LIRAs or LRSP, or deferred plans, the typical type of investments would be GICs, obviously guaranteed income certificates. We have a stellar 1 to 1.75% on perhaps a 5-year today. Where inflation would be about 3%, so you're actually losing money in those. You have corporate shares, which would be stocks on the stock exchanges in Canada and the U.S. Income trust units, very similar to that. Bonds, mutual fund units. What mutual fund units are generally units of a fund that hold a diversified portfolio of stocks. Labor sponsored fund shares, there's a little bit of a tax kicker on those, but generally the same thing. You do have, in some rare instances, the ability to direct into mortgages. However, it's very, very costly to do so, and the setup is very costly. And then again, shares, again, would be very similar to corporate shares, very traditional type of stuff. You could buy and sell, Intel, Microsoft, LIM, hopefully you didn't. Hold those type of general investments in your account.
For sure. Now, John, I don't see real estate on here as an option. So does that mean I can't invest directly in my real estate without going through buying shares of a company?
Yes, you're correct. Real estate in itself is not a qualified investment for any deferred plan.
Okay. So I know a lot of our listeners here on this webinar are going to go, well, I thought we were going to learn about how to invest and be able to use our funds to invest in U.S. real estate. And they're going, well, real estate's not on here. But we're going to show you actually in just a couple minutes how exactly you can do that through utilizing a share purchase. But before we get to that point, we're going to talk a little bit about how do you actually open a self-directed RRSP, and there's a number of steps you got to go through to make that happen, and we have an individual by the name of Josh Hagelke that's going to be the person that's going to walk you through kind of a three-step process that he has, where Josh will actually walk you through the entire process to actually open up your account. So the first thing you're going to want to do is contact Arizona Investor and talk to our registered plan division, and they will get you set up with the proper account opening information, and they'll walk you through the process. You're going to open a self-directed account at a participating financial institution, and we have one that we're going to talk about just in a couple of slides. That's a participating trust company, and that's where we would ask you to open up your self-directed account. And then once that's open, you're going to transfer your funds to your new account at the participating financial institution, and once those funds are transferred, now you are ready to be a self-directed investor. And so what we're going to talk about now is kind of how does it work and how can you go self-directing your retirement plan to buy Arizona property utilizing the deferred plan. So we'll kind of walk through that now on a step-by-step process. And what we'll do is we'll start with an investor. Whether you've got $50,000, $100,000, or $200,000, it doesn't really matter. But for the course of this example, let's say that you get $100,000 in your RRSP, and we'll just say it's with a financial institution. It doesn't really matter which one it's with. We'll just say it's with a financial institution. And John, what I'll do is I'll pass it over to you here, and I just want you to kind of walk them through the process that they're going to go to be able to activate their money and start investing in some U.S. property.
Okay, absolutely. So what we've developed is a way to get around the fact that that real estate is not a qualified investment. We know through Section 4900 that you cannot directly invest in real estate, but what you can invest in are obviously RRSP eligible shares of a Canadian company on a prescribed stock exchange. Without a doubt, those are 100% RRSP eligible. So taking that general model and simplifying a bit so that the viewers understand, what you would do is you move your $100,000 to your newly opened self-directed account at a participating financial institution. You would then self-direct those funds into the shares of a specific company. Now, this company is a funding company. It funds various companies in order to distribute consumer loans. Once you have self-directed into the particular shares of, we'll call it company ABC, that a particular consumer loan company will be funded with those funds and loan you 80% of your self-directed amount at 4.99% interest only for a 60-month term. Keep in mind, this interest is deductible because you're clearly investing in real estate. So by creating this model, what we've done is we've bypassed the inability for the RSP holders to buy real estate, because you are not directly purchasing real estate. You're actually purchasing shares of a qualified investment, an RRSP eligible company that funds a consumer loan company, which in turn funds you to purchase real estate. And that's the general system from a 100,000-foot view.
Well, that sounds fantastic. So that's how you can actually go full cycle, invest in the shares of ABC Company, and then an affiliate of ABC Company actually loans you that money, and you can utilize that money to invest with Arizona Investor and, of course, buy your U.S. properties. Now, a question that comes up, John, when I'm looking at this, and maybe some of the listeners of the webinar today, they're going to say, well, John, what happens with the other $20,000, and how come if I invest $100,000, how come I only get 80% by way of loan and I don't get 100%? Maybe explain why that is, John.
Okay, the reason that is this is a non-reporting loan, meaning that we don't do a credit check, we don't hit your credit for non-payment. If you do default, or if the investor defaults, they would lose 100% of those funds. One of the reasons we're able to give you such a very low interest rate is because our interest is generally guaranteed up front. And that's why there's a 20% reserve in the funding company. So make this long story short, if you do default on that loan, you do lose 100% of the self-directed investment. It is basically held in trust until you have paid off that particular loan on the 60th month.
But to me, that makes sense, because if I defaulted on any loan, typically, I'm not making the payments, and I would lose whatever equity that I had. So it would make sense that I would lose the money. So I think that we understand that. The interest rate at 4.99% for this type of loan seems very, very reasonable. Now, what would be the term of this loan? It would be obviously 5 years, right? 60 months of the term?
5 years.
5 years.
Yes.
Okay.
5-year term. It is interest only monthly. And on the end of the 60th month, the principal is due. In the loan agreements, actually, we have an option for the individual to renew at their option. So they could renew that at that point as well.
And then what rate would it renew at, John? Would it be the 4.99%, or would it be a higher rate?
Well, we probably anticipate that rates will go up over the next 5 years. But what we do is we cap that in that we can only charge an extra 1% should interest rates go up. So the maximum they would be paying would be 5.99% on the second 5-year term. They have an option for 2, 3, or 5-year extension terms.
Oh, they do. Okay, well, that sounds good. So when the 5 years comes up, they do have the option to extend based on really what the investor wants to do within that 2 to 5 year horizon.
Correct.
Okay, sounds good. Now, if I want to pay off the loan before the five years, is there a payout penalty or no?
There would be. I mean, you're basically held to the 60-month term. Our particular model builds in a particular amount of interest. Keep in mind that this particular model is a very expensive model to run, so there are costs that we shell out up front in order to make this model happen. We recoup those after X amount of months. So we do not allow early prepayment of that unless they wish to pay the interest up front as well.
Yeah, no, I understand that, and from my background as well, and providing so many securitized investments to Canadians over the years, I can tell you these structures are set up cost hundreds and hundreds of thousands of dollars, and to make them work for individual investors and lay down the platform and get the corporations set up, it costs a lot of money. We understand that, and quite frankly, though, if an investor goes self-directed, utilizing this format with their RSPs, I think the likelihood would be pretty remote that they would ever want to pay off that loan early, because I know I wouldn't want to pay it off early. Now, John, what are maybe some of the common questions that people have with the program? Can you maybe share some of the common questions that people have with this program?
Well, a lot of the common questions, people generally don't understand RSP eligibility, how it becomes RSP eligible. There's general questions around that because a lot of people aren't too savvy when it comes to either the Income Tax Act or probably securities for that respect, in that manner. So a lot of questions we get are, is this legitimate? 100% this is legitimate. What I can say to individuals is the participating trust company, the financial institution, is governed by the same rules and regulations as every trust company or financial institution across Canada. Mm-hmm. So they do a tremendous amount of due diligence to make sure that we are in line with securities legislation and tax legislation. So I always tell investors that they could not possibly do any more due diligence than the trust company does. Keep in mind, the trust company represents the individual, the investor. That they are the trustee for those individuals. They constantly not only do initial due diligence on every transaction, but they do due diligence going forward on a quarterly basis as well. So I couldn't stress enough that a financial institution in this country would not allow an individual to direct their RSPs into a non-qualified investment. So that generally puts that to rest, that one concern. Another concern would be that people generally have are, how do I know I'm going to get my funds? We have done in excess of $66 million in transactions and loans through this particular process. We've been at it for about 3 years. People have made a lot of money, been very, very successful. There has never been an unsatisfied customer, and when the individual goes through this process, what they do is they sign a letter of direction along with the funding company from the get-go. So what happens is the loan is funded directly from the trust company, thereby bypassing a transaction to the loan company. This does two things: speeds it up, and also lands the funds directly into the investor's account or the borrower's account from the trust company, thereby bypassing the accounts that it landed. So we've streamlined it, we've made it safe. There's nobody that touches your funds other than a insured financial institution and your account that you've designated to receive the funds in.
Okay, it sounds like a very high level of due diligence has been done on the program, not only from your firm, but also from the trust company that participates in the self-direction of the registered account. So it looks like a high level of due diligence has been done. A couple questions that I have, John, and then we'll move on to a couple other slides. The first one was, when I invest $100,000, if it was $100,000, like I said, it doesn't matter whether it's 25 or 50 or 100 or 200 or plus. When I invest the money, where does the money stay through the course of the 5 years? Where is that money?
That money is held in trust at the funding level, at the funding company level.
Okay, so it stays with the trust company is what you're saying?
Correct.
Okay, sounds good. Then the next thing is, and then maybe this is more of an accounting question, and obviously it might apply to everybody's own individual circumstances, but if I use this money to invest in, say, an Arizona Investor property in Phoenix, which I think most people would do, and they invest in a Arizona Investor property in Phoenix, now is that interest deductible against my income?
It absolutely is. Any loan in Canada taken for the purpose of investing is absolutely 100% deductible.
Okay, so I could actually reduce my income, which is what I want to do because I got to have this expense anyways. I can actually reduce my income, thus I'm reducing my gross tax payable.
Correct.
Okay, sounds
Absolutely.
good. Yeah, no, that sounds good. Okay, well, that's a good overview, John, as to how we actually set up the account at the designated trust company, to how we get that account set up. Our money automatically moves from wherever it is now to this trust company, and who facilitates that transaction is actually the trust company. They actually contact, we'll call them the relinquishing institution, and the relinquishing institution has to forward to the trust company the funds. So they actually handle that transaction themselves, and then the money will go into your newly opened self-directed account, and then when it's in there, we can activate the investment, activate the loan, and away we go. Sounds like a very a fairly simple process. I know there's a couple steps along the way, but a fairly simple process to get the program started and activate the money. Now, as an investor, if you have enough money, you can buy a whole property, and therefore you'd be utilizing 100% of your RRSP money for, we'll call that your RRSP financing to acquire a home. So if you purchase one of our properties, and let's just say you purchased a home for $124,900, now remember it's 100% financed because you used 100% of the money from your RRSPs. If you purchased a home for $124,900 and that property produced a conservative rental income in the amount of $850 a month, and you still allow for obviously your 4.99% interest-only payments that are going to be paid on a monthly basis, and you take off your expenses, such as your HOA fees, your property management fee, your property taxes, your maintenance costs. I'll leave a little bit of an allowance in there for vacancy, and you end up selling the property, say, in 5 years, and obviously we know now we're going to see a fairly healthy accelerated appreciation over the course of the next 5 years. That's what we project. You're still going to see a nice annualized return, and don't forget, it's 100% financed utilizing your RSP. So over 5 years, we would anticipate about a 45% return, which would be about 9% annualized. Now let's take a look at another scenario. Let's say that you used 40% from your RRSP and you used the other 60% from one of our approved lenders in the U.S. and you bought that same property at $124,900. You use 40% of the purchase price you're going to get from your RSP, so in this case, $50,560, and you're going to use that as a down payment, and you're going to obtain through our financing division just under $76,000 in U.S. bank financing. Again, the same type of expenses, and we're still going to be utilizing an appreciation factor, and you're going to see a healthier return if you utilize and you use that money to diversify it, maybe over 1 or 2 or 3 properties. You would see a bigger return because you're using the power of leverage, and you're taking your RSP dollars and spreading them over more assets. And if you joined us on our Retire on Rental Income webinar, we talked about how you could actually convert your portfolio and end up retiring on your rental portfolio. And why? Because of the cash flow that it provides would replace your active income that you have right now from your day job, providing you passive income. And that's what we talk about. And we know that a lot of people have made money over the course of the years through real estate, and this is one of the ways that they did it. And now we're at a very strategic time in our life, where we're able to buy undervalued, distressed properties that never been seen before prices. And I know it kind of sounds like a commercial because of the way it comes off, but it's truly, we're in an extremely overcorrected U.S. real estate market, and we've definitely assisted hundreds and hundreds of Canadian investors to participate in the undervalued U.S. real estate market with our turnkey system. Now, is investing with your RSPs, and is it safe, John? Like, do you think it is a safe investment to utilize your RSPs, or what's your thinking about investing with your RSPs? What do you think about these things, sir?
Well, I threw out a statistic earlier that shows how the markets have done for the last 10 years. Anyone who's done anything in mutual fund and stocks would probably understand that pain. It's very simple to get real estate statistics. I think real estate is a far better investment than stocks and bonds. It always has been, and I think will continue to be so. So if your question is, do I believe investing in real estate is safe? I certainly do think so, a lot safer than any other alternative investment.
Yeah, I agree. And when you talk about investing with your RSPs, is it legitimate? And I think when you talk about utilizing a program that's been endorsed by, the trust company, which is, of course, the money is insured when your money is in the trust company, up to, I believe, $100,000. Is that what it is, John?
That is CDIC insured. Every financial institution in Canada has the same insurance. Every account is insured for $100,000.
Sure. Okay. Sounds good. And then from a security standpoint, I think you're seeing more and more people are flocking to bricks and mortar and are getting away from those paper assets such as stocks, bonds, and mutual funds. We see more and more people, and in my entire 25-year career being in the real estate space, I've never seen more people flocking to the real estate investment space, whether it be whole ownership or securitized, participating in hard, tangible assets, bricks and mortar. And so from my perspective, I know a lot of you on the webinar, been on previous webinars, you know that I preach pretty strongly about my belief in what real estate can provide, but it's well-selected, well-timed, well-managed real estate. It's not just any real estate I think is a good investment. It's well-selected, well-timed, and done with the right turnkey provider, because it's a full service package is what most investors are looking for. Still that armchair investment, but their dollars are going into bricks and mortar that produce income on a monthly basis. And so we talk about receiving more attention from Canadian investors. It's more than we've ever seen. It's unbelievable. The picture you see up here on the screen is just a recently acquired property. This one here is the peak market price on this property was $227, and right now the current undervalued market price on this one is $159.9. Comes with the tenant in place. This is an undervalued property. It's way below replacement cost, and as you know, in our inventory we have houses that go anywhere from the low hundreds to 300. But for our investors, we like that sweet spot between 150 and 170. And our properties are the kind of properties that actually you would live in or your friends would live in. We're not buying houses that are built in 1950 that are rental neighborhoods. Those rental neighborhoods we stay away from because they'll always be rental neighborhoods. Our properties that we acquire for our investors are properties that show pride of ownership. So there's lots of basketball hoops in the driveways. Most are what we call a 3-2-2, which is a 3-bedroom, 2-bath, 2-car front attached garage. And they're in areas that are going to provide not only good returns for our investors on an annual basis, but when our investor goes to resell that property, you're going to have an option. You can either sell it to another investor as a good cash flowing property, or you can sell it to an owner-occupier and at a full retail value. And those are the very specific geographic regions that we're buying into and have been for the last few years in Phoenix, and just providing some great opportunities for Canadians to participate in that market. So again, just kind of wrapping up now this webinar about utilizing your registered plans, utilizing your RSPs to invest in U.S. real estate, how to get started. The first thing is call our client Caroline at 1-855-456-3223 and speak to our registered plan division. You're going to end up talking to a great individual by the name of Josh Agalki. He's a true pro in setting up the self-directed registered plans, and he's helped lots of Canadians get set up. And so he is going to be your designated person that's going to help you get set up to get things going for you. But please feel free to reach out to us. And again, visit our website at www.arizonainvestor.com, and you can see some of our current available properties, as well as take a look at our upcoming webinars and events, and feel free to join us on any future webinar. And also feel welcome to join us on some of our education and property tours that we put on every month. And we've got Carrie Smith, who's a big part of our team. She's actually down with a big group down in Phoenix for our tour this Friday. And if that one's too short notice for you, feel free to make sure you check out our next upcoming tour on September 1st, and that's going to be right on the ground in Phoenix. And so what a great presentation. John, thank you very much for joining us today.
Well, thank you for having me.
Did a great job, John. You explained the program real well, and I think the listeners will get a lot of value of what you said here. And I got to tell you, from people that are out there with registered plans, we get asked no less than on a weekly basis. We get emails or calls going, do you know I can use my RSP to invest in some of your real estate? And the answer has always been no, because the program's not set up yet. And now, of course, with this program that John and his team have set up, it's now available for you to participate in, so long as it works for you. And again, it's really got to work for you. I know you've got a lot of choices out there when you look at your investment options, and we really appreciate you taking the time and listening to our webinar today. So on behalf of all of us here at Arizona Investor,